Welcome to the Tradier Rundown. I am Jim Uriel. That's Bob Iacchino. We together are the hosts of Tradier's The Trader's Edge, which is at 3 o'clock Central Time, Chicago time on Wednesdays. Bobby, how are you?
Good. How you doing, Joey?
Good. This is a big day today. I mean, the Fed comes out. The Fed basically says again 75 basis points for 2024. That's the biggest part of it, right? And that's what affected assets.
Yeah, I mean, you still have the same median rate on the SEP, Summary of Economic Projections, also known as the dot plot. Yet they said they're going to, or let me rephrase that. They ramped up their GDP expectations or growth expectations. They ramped down their unemployment rate, and they ramped up their core PCE forecast. All of that means you should cut rates, I guess. That's a new one.
This is the crazy world we live in.
Crazy,
again,
man.
And here's what I bought gold as soon as I saw it, by the way. I bought
great move. Great
already,
move.
Yeah, already my uncomfortably long positions in gold, silver, Bitcoin. And
I think that's a fantastic move.
So here's what my theory is that, and tell me if you like it. Markets generally like lower rates. Markets generally don't like higher rates. However, what they really like is rates that are low, which is kind of at a disconnect from where they should be. You know what I mean? Does that make sense?
It does. So one of the things we saw intraday after the post FOMC was a steepening, or as you and I have said, a reflattening leading to a steepening of the yield curve, going like the 2s10s was -40. It settled yesterday, -34 intraday today. I don't know where it ended up because I'm not looking at it right now. So one quick thing about gold. One thing we know that in the context of inflation, and the Fed, again, ramped up their PCE inflation expectations, right? 2.6 now. Gold is an asset. People talk about gold as an inflation hedge, okay? And that is technically correct, but it's not right. Because if gold is an inflation hedge, goes up when inflation is rising, right? Then so are stocks, so is real estate, used cars in some cases. Assets go up when prices go up, right? Gold's an asset.
Yeah.
So it's not really an inflation hedge. It's a beneficiary of asset inflation, which is part and parcel to inflation. So based on that, we're looking at a Fed that is now saying we're going to accept a little higher inflation and it's not going to cause us to raise rates. So gold rallies, and it did rally today because it's an asset.
So funny because I just knee-jerk bought it right away. But like if I had time to fill in my fundamental analysis, it would have sounded just like that. Let's go for Bitcoin. So
let me rephrase that real quick. I'm not calling you smart. I'm saying that you've been doing this for 30 years and you have a reflex to seeing things over and over again. That's not necessarily intelligence.
I couldn't agree more. Okay, let's put that to bed. So gold, Bitcoin. Bitcoin had pulled back to about 20% from its highs. There's a halving coming up in 3 weeks, maybe 4 weeks. By the way, that's not that unusual to have market position volatility before the halving, because the halving should be supportive of the price. Do you think the move back in Bitcoin was just the position squaring and it's still going higher?
We talked to Michael Gayed on our other podcast, which will be released in a couple of days. And he said something I thought was smart. When you start getting more, I'm not going to say sophisticated, older investors into an asset, they go through their process of rebalancing. So when you've got too much exposure to something because it's gone up, they tend to sell it and rebalance overall portfolios. Based on what I think the halving means, a little bit above my pay grade, I think, yes, it'll be supportive after an initial repricing of where it should be.
Yeah, the one thing I will add to that is I think the rebalancing in Bitcoin happens, but it happens less because these Bitcoin crazy diamond hand hodlers are people who mistrust the government anyway. It is not unreasonable to think those people do not want to pay capital gains, and the incentive to avoid those, although they might hedge them. Maybe they're sophisticated enough they hedge them with futures.
Completely agree, except they're the ones who've been involved forever and have not been able to drive it back up above 70,000. It was the ETF people who did.
Who did that, exactly. All right, this is the Tradier Rundown. I'm Jim Uriel. That's Bob Iacchino. Please join us at 3 o'clock Chicago time because Chicago is the center of the universe. 3 o'clock Chicago time on Wednesdays. We'll see you there. Thanks for tuning in.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member